Hey, what's up, guys? Today, we're diving into something really interesting. Unheard of passive income ideas using the stock market. Now, we all know the basics. Buy stocks, wait for them to go up, maybe collect some dividends along the way. But what if I told you that there are hidden strategies that let you make consistent passive income without being glued to your screen all day? I'm talking about real, achievable, and low-risk ways to make money passively, things most people have no idea about. So grab a notepad because I'm about to break down some of the best-kept secrets of the stock market. And no, this isn't about day trading or risky speculation. This is long-term, sustainable passive income that you can use to make $500, $1,000, even $5,000 a month, depending on your portfolio size. All right, let's get into it. Covered calls, the stock market's best kept secret for passive income. All right, let's kick things off with one of my favorite stock market strategies for passive income, selling covered calls. Now, I know, options trading sounds intimidating to some people, but trust me, covered calls are actually one of the safest and easiest ways to make steady cash flow while holding stocks you already own. So, here's how it works. You own at least 100 shares of a stock. Let's say you own 100 shares of Apple, AAPL. You like the stock, you want to keep it, but it's just sitting there. You sell a call option against your shares. Think of it like renting out your stocks. Someone pays you a premium upfront for the right to buy your shares at a certain price, called the strike price. If the stock stays below the strike price, you keep your shares and the premium. Let's say Apple is trading at $180. You sell a covered call with a strike price of $190. If Apple never goes above $190, you keep the premium and your shares. If the stock goes above the strike price, you sell at a profit. If Apple jumps to $195, you'll have to sell at $190. But guess what? You still made a profit because you got paid the premium and sold your stock at a higher price. Now imagine doing this every single month. That's consistent passive income rolling in no matter what the market does. I know someone who literally pays their rent just by selling covered calls on stocks they already own. No extra work, just collecting premium income month after month. And if you don't want to do it manually, some brokers like Schwab, Fidelity, and Interactive Brokers let you automate covered call selling so you don't even have to touch it. That's as passive as it gets. Dividend capture strategy. How to get paid over and over again. All right, let's move on to another overlooked stock market hack, the dividend capture strategy. Now, most people invest in dividend stocks thinking, all right, I'll just hold these stocks and collect dividends every few months. That's cool, but what if I told you there's a way to get paid dividends faster and more often without holding stocks forever? Here's how it works. Every dividend-paying stock has an ex-dividend date. This is the last day you need to own the stock to qualify for the dividend. You buy the stock a day before the ex-dividend date. This locks you in to receive the dividend. You sell the stock shortly after the ex-dividend date. You keep the dividend and move on to the next stock. Let's break it down with an example. Coca-Cola KO pays dividends every quarter. The ex-dividend date is coming up on March 15th. You buy 100 shares on March 14th. You hold it through March 15th. On March 16th, you sell your shares. A few weeks later, the dividend cash hits your account. Now you repeat this process with another stock. If done correctly, you could cycle through multiple dividend payouts in a month without being locked into any one stock. Selling put options. Getting paid to buy stocks at a discount. All right. This next strategy is a game changer. If you've ever wanted to buy stocks at a discount while getting paid at the same time, it's called selling put options. And here's how it works. You sell a put option on a stock you already want to own. You get paid an upfront premium just for agreeing to buy the stock at a lower price. If the stock never drops, you keep the money and move on. If the stock does drop, you buy it at a discount, a win-win situation. Here's an example. Tesla, TSLA, is trading at $200. You like Tesla, but you'd rather buy it at $180 instead of $200. You sell a put option at the $180 strike price. You get paid a $5 premium per share, meaning you collect $500 upfront for selling the put. Now, two things can happen. If Tesla stays above $180, you keep the $500 and move on. If Tesla drops to $180, you buy it at the cheaper price, which is what you wanted anyway. This is literally like saying, hey, I'll buy this stock at a discount, but if it doesn't drop, just pay me for my time. Passive stock lending, letting your shares make money for you. Most people don't realize this, but did you know you can loan out your stocks and earn interest without selling them? Brokers like Fidelity, Schwab, and Interactive Brokers have a stock lending program where they lend your shares to short sellers, pay you interest for lending them out. You keep ownership and still collect dividends. If you own stocks that are heavily shorted, this could be an extra stream of passive income. Final thoughts. All right, so we just went through some unheard of passive income ideas using the stock market. Selling covered calls for monthly cash flow, using the dividend capture strategy to stack dividends faster, selling put options to get paid for buying stocks at a discount, stock lending to earn interest without selling. If you found even one of these ideas useful, drop a comment and let me know which one you'd try. And remember, passive income is about working smarter, not harder. The stock market isn't just for buying and waiting. It's about using strategies that make your money work for you. Catch you in the next one.